Welcome back to Be Rich, everybody. Today we've got Sashwath from his college. Give us some time on the weekend because he read a very interesting article in the Financial Times, and I thought it would be interesting to share with all of you. So, why don't you take the lead, Shashwat, and tell us about what this article is about?
Yeah, so basically, Warren Buffett had invested in five Japanese conglomerates, the biggest ones. They were called the Sogo Sosho, which are basically some of the biggest trading houses in Japan. So those companies are Mitsui, Mitsubishi, Sumitomo, and Marubeni. And the deal is actually a really interesting deal. So I'll just go over the details of the deal, which had been done before, and then we can talk more about what is going to happen now. So Japan is known for having ultra low interest rates. So the Japanese interest rate now is minus 0.1%. And they've been testing out the waters with negative interest rates for a while now. So Japan's history started off with the 1980s when there was a big bubble. And in 1989, the stock market bubble burst in the Nikkei index. Until today, we still haven't seen those sort of highs being met. So the Japanese public have basically been traumatized for over 3 decades now. And what this has created is a liquidity trap, as we call it. That is, as much as the Japanese central bank and the Japanese government try to push the consumers to spend through either fiscal and monetary policy. So that could be through tax cuts, through tax rebates, through subsidized goods. They still haven't been able to push Japan's inflation rate very much. Japan has still been extremely deflationary, and at best, they've been stagnant. There has been no big growth. And Japan also has a problem of an aging population. So the capital requirement in Japan is actually extremely low in the sense that you see interest rates at really low rates because of this liquidity trap. And the liquidity
Hmm.
trap was basically a concept which John Maynard Keynes came up with. So all this being said, Warren Buffett in 2019 and 2020 during the COVID time, he saw that Japan's interest rates were artificially low. That is, the Japanese lenders were basically paying you to take money from them. So they were saying, please take money and I will pay you a portion of that for taking my money and investing it. So what Warren Buffett said was, okay, I'll take it from this hand and put it in the other hand. So I'll take these five companies and all of them have a dividend yield of at an average of around 4.5%. So he said, okay, I'm going to borrow 1 trillion yen for 0.1% or 0.2%, and I don't have to make a payment for the next decade, something to that effect. Basically, it's very, very lenient lending terms because Berkshire Hathaway has a strong position. So they were more than happy for Warren Buffett to take some money from them. So Warren Buffett said, okay, boss, I'll take your money and I'm going to plop it in these trading houses, and these trading houses are Berkshire copies. They're basically low risk companies, very low debt, cash rich, free cash flow, and they do a very safe business, which Warren Buffett understands, which is that they take commodities from this side and then pass it on this side. It is a safe business to a large extent. And the dividend yield offered is 4.5%. So Warren Buffett pretty much engaged in an interest rate arbitrage because he took money and the cost of borrowing was only 0.1%, 0.2%. And he's basically saying, okay, now I'm going to get a yield of 4.5%. He just minted money out of thin air pretty much. And Berkshire didn't have to pay a dime for this. He just had to take from this hand and pay it this hand. And he can take the dividend yield from whatever he gets from these trading companies and basically pay off his 1 trillion yen loan. So that's the idea of the deal. And today we're talking about it because Warren Buffett recently went back to Japan for an in-person visit, which is quite rare. He's 92 years old now and he went to Japan for an in-person visit. So now there's a lot of speculation where his followers enjoy trying to figure out what are Warren Buffett companies and can I get into Warren Buffett companies before Warren Buffett himself gets into Warren Buffett companies. So what do you have to say about that?
Yeah, let me explain what you just said for simple people to understand, like me. You said it very eloquently. I'm on a method of flying very
Yeah.
high above the clouds. We laymen are walking on the road. We hear the word arbitrage, negative interest rate. We find this all very confusing. So for lay people like us, what basically is Japan needs people to invest money in Japan. That's Japan's problem. Warren Buffett is always looking for somewhere to make money. So Japan looking for investors to entice investors. What they're basically saying is, don't worry. If you don't have money to invest, we will give you the money. Not only we will give you that money which you need to invest with us, we will discount it for you. Meaning, if you borrow
Yeah.
100 rupees from me, you only pay back 90 rupees. 10 rupees discount. That is what
Yeah.
negative means. And they need someone who has the trustworthiness and the background to do this deal. And there are very few people in the world who can have this all this mixed together. And Warren Buffett is very lucky And the world is very lucky to see Warren Buffett do this. So what Japan has basically done is given Warren Buffett 10 rupees, told him you pay back 9 rupees to me whenever you want. No problem. We trust you. We trust your company. And Warren Buffett said, okay, here's this 10 rupees which you gave me. I'll put it in your country in a Japanese company, which is going to pay me money. It's a very safe
Exactly.
business, which is going to pay me yearly money for the money I
Yeah.
invested. It's like a FD. Basically, he's buying
Yeah.
the company, the dividends like an FD. So he's generating money out of the money, and he's going to take the money and start paying back that loan
Exactly.
to Japan's given. So he's basically, like you said, just because he's Warren Buffett, he went and sat in a table, and they're giving him free money, they're giving him a free company, free ownership,
Yeah.
and everything because they need to facilitate the blood circulation of Japanese currency in their country.
Exactly.
Because the Japanese people are so traumatized and they themselves don't want to take any risk or do anything, the Japanese government needs someone trustworthy to come inside to engage this so the Japanese people feel, things are not so bad as they were 40 years ago. That nightmare is over. We are moving forward. Things are getting better into a better picture. All that said, now Warren Buffett is smelling another deal because this deal worked out very well. Everybody is happy in
Right.
the deal and things are going according to course. Warren Buffett like, okay, we did this operation very well. Maybe we can do round number 2. All the speculators who are in Japan, including the Japanese, they're all very excited. This is what the Japanese government wanted. They wanted news to start, positive news about Japanese companies coming. They wanted Japanese people feeling positive, investors within Japan to feel positive about Japanese companies. So this
Right.
is going to create a positive feedback loop, as Anand Mama says, feeding on itself, creating more
Yeah.
enthusiasm. Because now, if Warren Buffett is going to go invest in ABCD, in the article they mentioned Toshiba. Toshiba
Yes,
is one of the
Toshiba.
greatest companies with a 150-year history. It's in the
Yes.
doldrums. If Warren Buffett is able to come and infuse some life into that brand and that company, that's all it needs. It needs a confidence boost. Someone to say,
Yeah.
Toshiba, don't worry, you're still a great company. I'll put money in you. That happens,
Right.
other investors will flock to Japan. That is the idea behind this deal. Am I right? From what I understood?
Yeah, absolutely. And I think you also elaborated on one point which is important, which is the circularity of the economy. The sense that you need someone to pass from this hand to that hand. It may seem like an arbitrary role. Like why is that such an important point? But you can't have a body without the circulatory system going.
Correct.
And Warren Buffett is willing to be that figure.
Correct. And the most important thing to remember is the person who is being the circulatory person is the heart of the whole thing. So that person has to
Right.
be very trustable. And everyone can say, hey, anybody can do this. But it's not true. We saw what happened with Silicon Valley Bank. So
Right.
you do not know who's in trouble because of the nature of the economy and the nature of investment. There are certain dark areas, and we never know till someone is in trouble that they were in trouble. That someone has made a bad investment till it all comes out to light and everything collapses. Warren Buffett has a history, and most of his deals have been transparent, and he's a very honest guy in this regard. So people just blindly trust what Warren Buffett does. There's very few people in this planet who are believed and followed like that, especially in investment, because your money is something you work very hard to earn. The last thing you want to do is put it in some potluck and you never see it again afterwards.
Yeah, no, I wanted to also ask you, I mean, yes, this deal is something which Warren Buffett was in a perfect situation to sort of take and exploit not exploit, but to lap up in a certain extent. But what are some insights we can take from this deal and apply it in the way a layman like us, like someone, the retail investor, what lessons are something which we can take back from this deal?
Well, retail investors have been doing something very similar to this since the financial collapse in the US in 2007, 2008. Because of quantitative easing, US was filled with a lot of cheap money. You could, get money for nothing in the US. So a lot of Indian origin people who were there and foreign investors took that free money and brought all the free money into the Asian markets. That's one of the main
Correct.
reasons for the FIIs to flood India was that. Because if you take that arbitrage, like you said, where I take the money from Uncle Sam for almost nothing, he was giving me dollars. I bring it to India, put it in India. Okay, Indian rupees losing all the time. But even if you factor that in, and in a year, if I'm making just on the Nifty index itself 12%, 10%, and I take away for the dollar loss, I still stand to make 2-3% for nothing. Just taking $100 from there because of my credit worthiness and the US government desperate to pump in money. Take that money there and dump it here. And every year I'm getting free cash. That all changed the moment all started jacking up the rate. It means the cost of borrowing is going up. So this interest which you are getting 3%, 4% for nothing started diminishing and started turning negative. The moment it started flipping, everybody wanted to pull their money out and close their loans fast because
Right.
Why would you want to lose money?
And money is flowing back to the US now.
Correct.
So,
That's why it's strengthening the dollar, making India's
and
problem worse.
now that the pendulum is sort of swinging the other way, now it's been going this way for a while, and we know that the pendulum seldom stops at the middle. It always goes the other way
Goes
and swings.
absolutely.
So the question here is, once Powell sort of jacks up interest rates a bit more, would it be a wise decision to bank on the US again? Because now you have positive returns, positive real returns in the US stock market. Now that interest rates are being jacked up, prices sort of correct, and then you have a better opportunity for returns in the US market for Indians, especially because we have the currency arbitrage.
Absolutely true. What you're saying is very correct. But the only issue which I have with all of this is we are very small guppies. Warren
Yeah.
Buffett is a whale. So there's no comparison here. Me and you do not have access to that kind of capital. Our capital being field is very small. So it's more like what Anand and you are discussing. It's like what Peter Lynch said. We need to invest our small fortunes in specific companies. These are all nice to hear as news. It's positive news that things are improving in Japan. Things are improving in US. Things are, like looking globally much better now. All that is true. But we need to find single companies where we can get inside and sit for 10 to 15, 20 years. Especially at your age point, whatever you put your money, that money has to stay there for the next 15 years is what we have to say. So those are the companies we have to look for. That too being an Indian resident and our market mainly being in India, it's good news for us if the dollar is strengthening and the capital flight is happening from India. That means as an Indian, you have opportunities to buy Indian companies. We have to sit out and watch everybody have fun. Now the bank is breaking. The dam is broken and it's starting to trickle and flood very soon. So at that point of time, we should hold on to our cash now and not do any crazy spending. Forego the latest iPhone, forego the latest motorcycle, and hold on to this cash because we are going to get an opportunity probably in the next 12 months to 18 months. Probably.
You basically don't want to get caught with your pants down when the tide is receded, pretty much.
Correct. More than that, you feel very bad. It's like when you see the sale, you buy an iPhone today, and tomorrow you see in Flipkart they've reduced it by 10,000 rupees. You feel like an idiot. You're like, man, if I'd only known, I would have waited for one more day. So we're telling our audience, boss, wait for one more day. Don't be in a rush. That's why we're saying Tiffin Coffee Almama keeps saying, because he wants you to wait. When the opportunity comes, at that time you'll be able to enjoy and go really shopping. Instead of buying one Manappuram share or one ITC share, you'll be able to buy 4 or 5 of them at a good price. So, and another thing is, like Warren Buffett, what he does is he picks these stocks, these companies, invests in these companies. He's not blanketly investing in 100 companies, 200 companies, putting bets on in a roulette table. Every box he's not putting $2. He analyzes, he looks at a point where he can make the money. If it makes sense, then he places his money there. Same way as retail investors, this is all great news. But then you should pick the companies where it makes sense for us to sit, and you should not have more than 3-4 companies because more than that you cannot keep an eye on it.
Too much is happening.
Yes, and you won't know. Let's say you bought 1,000 shares in a company and you're buying 1,000 shares in another company, and you keep this habit up, just buying for prices everywhere it's dipping, and you're randomly buying on all these dips, and you don't know where you have your money. Then suddenly you see like 2 years later, your portfolio is a complete mess. You have like 40 companies, some are up, some are down. You don't know. Overall, you just made a marginal money. That's what Peter Lynch says. Because you're trying to catch these dips and make 2 rupees here, 3 rupees there. Net, you'll be losing money.
Exactly.
You would have made in ITC, you would have made 100 rupees. But 2 other companies, you would have made negative returns. Because you didn't look at it. You didn't bother tracking it. You've just been randomly buying.
It takes a lot of time to acquaint yourself with any company. For example, ITC, for us to build the conviction which we do have in ITC, it's taken us a good 4-5 years for us to go through all the con calls, all of the annual reports which have come out, and every news report which has come out, and to weather the 138 rupees drop, to go from 300 to 138 and sit there and buy more at 138. It's sort of like you're building a relationship with the company itself.
Correct. And this is exactly what Peter Lynch also says. He says when you buy a share and it dips, how do you know? Do you buy more or you sell your position? How do you know? Unless you read, unless you have attended those annual calls and you know what is happening, you cannot take a decision on it. And you can do it for 4 companies, 5 companies at max. You cannot do it for 30, 40 companies because all of us have lives to live. We're not money managers. We're not doing this day in and day out. We all have
And
other
even
lives
your
only.
and even your money managers also have 2, 3 other people under them to do this for them for multiple other companies.
And your money managers has other motivations. In mutual fund companies, they always inevitably have to sell when we should be buying, and they buy when they should be selling because the pressure from their customers are so much.
Right.
He has to please so many of his customers, and he has a board to answer to. He has no
Yeah.
choice, though he knows he's
But
making
we
a wrong decision. But we have a different position as an individual investor, retail investor. You have this liberty, but
and
it is
you as the individual investor also have the ability to buy positions and sell them as and when you please, in the sense that you're not tied to anything and you don't have
no,
to
you're
mirror
not.
the index.
No, you don't have.
Whereas the fund manager is supposed to keep up with the index or give a positive return. So half of the time, their fund portfolios are sort of pretty much the Nifty index with 2, 3 other companies added or subtracted.
Correct. And the lesson you learn from this Warren Buffett story is there are opportunities in a very, very minute level in your own lives around you. Like, for
Yeah,
example, you know a friend of yours who's running a business. You know that friend for the last, you've been going together from school, you know him, and you know his
yeah,
business is very sound. But because of COVID or whatever, he's run into a tight patch. But you know his business is sound, it will recover back in 5 years, 10 years. And he's desperate for some bank to lend him money. But if you have some free cash, you can go sit with them and tell him, boss, that bank is going to charge you an arm and leg.
yeah,
I know you're in trouble. I have some free cash sitting with me. You pay me half what you're going to pay the bank, and you bring me as an investor and a part owner in your company. And you
yeah,
can negotiate something where it's sweet for him, sweet for you. You say, don't have to pay me back for 5 years. But now I'm part of your business. I own a share of your
yeah,
business. You don't have to give me any dividend or profit for 5 years. 5 years from
yeah,
now, we'll talk about repayment or we'll talk about profit sharing. But here's a hand, I'm giving you a helping hand to support you because I believe in you. And that is a sound investment. And who knows, you invest in three of your friends like this, one of them might become another small scale industry, might go into become a small IPO he might do, become a
yeah.
small cap company. You don't know.
Possible.
These opportunities are always there. What is the learning lesson from this Warren Buffett deal is look for investment opportunities around you itself.
Yeah,
That is the learning from it. Of course, we all wish we had like Japanese government will call you today and say, "Hey, Mr. Shashwath, please come. We're going to give you some free cash. Please invest in a Japanese company. Take some more money from
yeah,
us." Because it's possible. Who knows? Maybe when you're 80, you would have become that kind
yeah,
of a person. Who knows? But it's nice to see it. It's heartwarming because we love Japan. We love Japanese technology. We love
yeah,
Japanese culture and history. So to see them getting a second shot at this, and God knows they need a lot more Warren Buffetts. Their economy
yeah.
needs these kind of supports. Their companies
Mm,
need these kind of supports. I would hate to see a brand like Toshiba disappear. So I
yeah.
hope we see more of this for Japan.
I mean, even with 1 trillion yen of money being pumped into these companies, their average dividend yield till date is still 4.3, 4.4%. Even if Warren Buffett pumps another 2 trillion yen into it, he still stands a chance to make a lot of money. But the only thing which he's sort of wary about is that if he crosses the 9.9% shareholding threshold, he has to now become part of management, which I don't think
Yes.
he
No, he
enjoys
doesn't.
companies doing their own management.
Yes. No,
Yeah,
because it's something he doesn't like doing.
yeah.
I'm sure
So,
Japan will probably give him some special Warren Buffett caveat where he alone
yeah.
doesn't need to do it. Because the problem
But
for Japan is there's not many Warren Buffetts out
yeah, I mean, his reputation is something which you don't see with anyone. Even George
there. No, you
Soros
don't.
doesn't have the reputation
No.
which Warren Buffett does.
So the main advantage Warren Buffett has is he doesn't do politics.
Correct.
Problem for Soros is Soros
He does
wants to be a
politics. Yeah,
social champion.
yeah,
Warren Buffett stays out of it.
yeah,
He stays out of politics because him and Charlie, they are investors.
yes,
So they believe societies go through its own ups and downs and go through cycles. He says that's the whole world and history and everything, but we have nothing to do with that. We are investors. We're here to make money. We invest
yeah,
good businesses. We support, and that's it. As long as it's lawful, ethical, we're here to support. The problem with Soros is he's got his own agenda, and that leads into a problem. Because let's say the ruling party is on your side, then they let you invest. The next party comes, they don't like Soros, then they'll want to hurt Soros. So as an investor, you don't want to be associated with them.
right.
Though Soros
Because
personally can take the punch. You're a
yeah,
small investor, you can't afford to take the punch.
of course. And yeah, I mean that's pretty much what I wanted to bring up because I felt like it was. I mean, Warren Buffett going all the way to Japan is a pretty big deal because he's
Yes.
92. So
Yes.
yeah, but I wanted to bring it up, so I thought that'd be an interesting discussion.
Yes. And thanks for reading
Yeah,
this article and sharing it with me, Shashwat. It was very
yeah,
interesting. And I'm glad we got to share it with our audience. I hope all of you guys enjoyed it. And do like and share our videos and subscribe to our channel and turn on the bell notification. So every time we come out with some new content, you know we're there and we're out with some new content. And anything else you'd like to add before we sign off, Shashwat?
no, I'm good.
Okay. So thanks everyone. Thanks for watching. Be rich and hope to see you again soon.
Today, I want to tell you that I'm going to be in Singapore, and we are going to have an event on the 29th of April 2023. My team will let you know the location later as we come closer to the event. But the event is fixed on 29th at Singapore. Those who want to meet me in Singapore, either at the meeting or personally, can contact the WhatsApp number below or send a mail to the mail mentioned below. I will see you in Singapore. Once again, thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.